Good morning.
Morning.
How are you?
Just on the morning ride.
Oh, is it warm?
It's slightly cooler. The last few days have been about 25, 26, but now it's a bit cooler. Rained overnight, so now it's about.
Yeah,
Yeah.
right.
Sorry, I almost just ran over someone.
Oh, good.
Better concentrate.
Alrighty. So, how did we all get on yesterday? CPI day. Sounds like it was a good day. All right. So let's have a little look. It was cool. So yeah, yesterday CPI day, very crazy day. Lots of volatility, lots of extremeness. We had a lot coming out at the same time. It wasn't just CPI to deal with. There was CPI, retail sales, and Empire State Manufacturing Index. So first of all, CPI came in a little bit softer than expected. So 0.3 over 0.4 as was forecast. The core CPI, excluding food and energy, that was this one came in as expected, which was a decrease on the previous month. There were no revisions to deal with. You can see here that there was no prior revisions to previous months, which was in line with so everything came in as expected. Core retail sales, they did have a revision. Okay, actually we'll talk about retail sales after. But core CPI came in, no revisions, no changes. CPI month on month, same thing, came in a little bit lower, which is a step down from the previous month. Forecast 0.4, came in 0.3, no revisions to other months. And then we've got CPI year on year, and that way, because we ticked down by 1, we decreased by 0.1. So this renewed the hopes of rate cuts. So now you're going to see a lot of fervor into people pricing likelihood of a rate cut again. This is short term, very short term, because we're going to have a very difficult next 3 months. At the same time, we had retail sales come in, they disappointed. So we had revisions as well. So take note, forecast 0.4, actual came in at 0, and then the previous month was 0.7, got reduced to 0.6. Okay. Wanted to check gold because I would like to see this drop. Come on. Now we had Empire State Manufacturing as well. This one came in worse than expected. So all of this shows like a softening of the economy, and not only was it inflation ticking down, but it was also slower consumer spending, which could like say, are we going to recession? Is this going to lead to recession, etc., etc. So all of this led to dollar bears, equity bulls, gold bulls, as we expected yesterday. What we wanted to see, I didn't really care what the numbers came in. I just wanted to see a surprise to the upside or a surprise to the downside, as in like pretty much, all one way, either to the downside or all one way to the upside, because then you get cleaner moves. But with CPI, you get huge amounts of volatility. So I think it was all fairly straightforward. There was actually, not much to say. It was just expect to see, the act of CPI is to look for gold bulls, equity bulls, dollar bears. Just know that with all CPIs, you get like massive corrections. So you could have taken like punts for short-term price pushed up, made a wick, price pulled back a little bit, retraced like 50%, then did a partial retest, and then you get the manipulation come in where they sweep all the buyers that were in the market in the previous sessions, get rinsed, rated. People probably jump into sells and then just get absolutely raped. So we had a nice little reaction. This area that we saw a reaction from made sense. That was where we had a reaction previously as well. We're seeing that this whole area up here has been problematic. Okay, this structure over here, where we've got like a consolidation. First time we get back to these areas, we're showing it's tricky to get in there. Rejected again, came back, grabbed the liquidity from all through the session lows, and then once price started to stabilize, we started seeing some nice structure starting to develop. So after we saw the sweep, then we started, you get this nice structure, and it's just all up from there. Beautiful, absolutely beautiful move. Now once we close inside a structure, we know we go to the top. So once we finally got that candle closing inside, just makes sense. Oh wait, sorry, this is too far to the left. This one over here. So once we get that candle closing inside structure, you know, it makes sense now to trade to the top of structure. Now, yeah, just all piece of cake. Now we've had previous resistance. Okay, so previous resistance was all along here. So I wouldn't be surprised to see now that we've hit the top is can we on the back of this liquidity candle retesting this one, can we see support break and we see price push down into this zone? There is another school of thought regarding mid-morning gaps that we're exploring. Not mine, it's from another trader. Bruce Lee speaks about it a lot, and it's a guy called Gensler. Lots of great information. I'm really looking forward to like seeing how we can develop and incorporate this even further. But there's a mid-morning gap around about here, around this yellow this line here. So I wouldn't be surprised to see price make its way down here. This would simply just be a bit of a pullback as well. Like there's a lot of reasons to look for this pullback. Makes a lot of sense to be safe. You know, make sure you're taking profits. Or make sure that you make sure if you're in a trade somewhere around here and we're hitting 2380, that doesn't become a losing trade. You know, manage it whatever way you prefer. That's a must. That's a must not to let a trade that's running 80 pips in profit become a losing trade. But I can see price pushing down to retest the base of the structure, or even get down to where it was previous resistance, now support. So I really like that idea. So I'm hunting sells. I do think that there could be some short-term momentum to the upside. I've got another little zone just above this little green zone. So I wouldn't be surprised to see price tap into this 2400 or 2405 area before dropping. That makes a lot of sense based on this daily candles. We've got two previous rejections here, along here. And it's the top of the 4-hour structure. So I wouldn't be surprised to see that there's liquidity inside this green zone, that we have a little, you know, price just struggles to break above it for a couple times. Yeah, other than that, gold, you know, was brilliant. Just going back to CPI here, why I think we're going to have a little bit of struggle moving forward is I think the narrative of rate cuts are going to hold weight for a couple of weeks, because we don't really have much more in the way of US news. We do have unemployment claims later on today, and geez, if we get a 230 again, like, you know, just gold, dollar sells, gold buys, equity buys, because there's no real US news for you know, quite a bit after. You know, this week was massive with CPI. But after that, I'm expecting US dollar strength to come back. Yeah, because when we start replacing these next June, July, and August inflation reads, these came in pretty low. pretty low. So for inflation to continue dropping, we're gonna need reads of under 0.1. So it's got to come in zero or even negatives to actually make any headway for inflation to continue dropping for the next 3 months. So I think we're going to have a real sticky. I don't think we're going to be cutting in September, that's for sure. I think you're going to start seeing rates get pushed back again to November, December, and that's going to unwind a bit of optimism that we've just had bring into the market on yesterday's CPI print. One thing that's really holding inflation as well, that's making things super sticky, is this. So this is the breakdown. This was just pinched from Financial Juice, but this is the one I'm looking at. Shelter makes up a lot of the CPI print, and this one you can see, and it's not just like since October, it's since like another 2 years before this as well. Shelter, I think, is only not increased by at least 0.4% once in the last like 2.5 years, something like that. So until shelter starts to see some sort of easing, this is gonna keep inflation high, and it's gonna keep it at least higher than the 0.1, 0.2 that they need to beat in the next 3 months. And they don't see any reason why it's gonna, unless they make some sort of shift, they don't seem to be actively working to bring it down, and it's not going to just magically start coming down. So I imagine that inflation is going to stay high just because of shelter. People are locked into their homes now because of interest rates and house values coming down, and no one wanted to move, just the way that the US has their mortgage structured. So yeah, it's going to be, I can imagine equity markets create a top, and then we just have a bit of a pullback for the next few months. Once we get this initial boost of optimism start to peter out, then it's going to be, I'd say we get a quarter of pretty hard to keep rising like we have. I saw a good saying today actually. When it showers in April, it flowers in May. So we had pretty rough April for equity markets, and May recovered. Also, do you guys remember when I said there's not many people here, so hopefully one of you guys remember that when I say that there was stats that these guys looked at, and they said never in the last 30 or 40 years has a market made a high in April, and that being the high of the year. Do you remember that? I think it's only once in March that the March has been the high of the year. So when the equities made a high, it was basically like one of the last days of March, and then some of them did it in April, I believe. There's only once in 40 years or so that's been the high of the year. So a rally made a lot of sense. It's just about when. Oh, Michael did great with gold. Awesome. That's so good to hear. Hey, Ty. How are you? Ivan, sorry, I missed this question, mate. So you were mapping last year's months to now. What's the difference for CPI? Oh, okay, you got it. Yeah, sweet. Yeah, it's just because when I'm looking at last month's, like the old ones, this is going to, because what people look at, they don't necessarily look at month-to-month changes. What they're looking at is year-to-year changes, because they want to get year-to-year down to 2%. So when you get a month, 12 months ago, roll out and introduced with a new read, and that's going to be what changes year on year. So they're trying to get it down to 2%, so they've got a long way to go. Long way to go. September could give a nice little drop because that was a high read, 0.6. So if that say when this number rolls out and it's replaced with a just say we get a low number, say we get a 0.1 for September this year, then that will bring year-on-year inflation down by it'll bring it down by 0.5. So it could be a big change. What do you mean holidays? Why it was like this? I think around September was when we had I think oil was going pretty high. Yeah, see in August. See how like from July we saw price of oil go from 66 basically up to 94. So the oil price going up like basically 50% is contributed to the cost of everything going up. So that's what would spark a high inflation read. It's all connected, hey? We just need to know which strings to pull on. That's why I think market's such a strategic little thing. It's great. What else? So yeah, today to consolidate this bullish trend, what we'd want to see in New York session is a Friday soft unemployment print. If we get a soft one, so you can see all these other, like for 6 months or so, we stuck around, pretty much price didn't budge, and it stuck around this 210, 200 average. Then we got an outlier of 230, and we had a 230 outlier once before back in November over here. And this was just like a brief tick up. So I want to see if this is actually consolidated, because maybe there was just an error in some of their data, and then what they did is they just added it to the number. So maybe it's just like a brief uptick. One of the guys that I follow, so I've said this many times now, he searches Google search trends. He follows that to see if there's more people just trying to figure out how to file for unemployment, and usually that could be a leading indicator to see how many people are out of work. And there's been no real change for Google search trends in the US. So if we just come back down to 200, 210 again, then I believe that would that'll show that the labor market wasn't as soft. Probably won't have much of an impact if that's the case. I think that if we get a high number, it's going to have far more impact than if we get a number that comes back closer to the average for the last 6 months. So that's what I'm looking for, to see if we can consolidate and actually have two back-to-back numbers of 230. If that's the case, then we'll just keep on looking for buys on gold, buys on equities, and we won't search for sells until price is a bit higher up into these like 2400 region. Yeah, that's about it, guys. I think that's a bit of a summary of CPI. Sorry I didn't get the update out last night. It was time I was going to bed. It was just too late. And I wanted to get up early to target some for the stream. I don't know. Alrighty. So what else? We saw Aussie US. That was that swing trade idea. We finally got there. Smashed it. Got into this target. That was the whole idea from back during the interest rates for Australia Tuesday, a week ago. That were the swing ideas to trade from an entry here, and had another one which didn't get filled here to trade back up to 67. So that was a nice little 160 pip move on a 120 pip move on a currency. Very good. All right. What's your bias, guys? What you looking for?
I haven't quite worked it out yet. I haven't still marking up the charts.
Welcome back, Rob.
Thank you.
I really looked at Fibonacci numbers, but I believe that 740 has now hit the 150% monthly fib extension.
Okay. On German.
German 40.
Mm-hmm.
I'm pretty sure, yeah. That was one of the few sort of markers I had right up the top. So I thought that was just going to confuse me.
Sure.
Another point to get confused about.
Revenge day for us. Full margin, yeah. Did you understand that did you understand that slide? Those pictures that I put in, Russ? You did? Yeah. I'll just show others as well that might not have understood. This is back a couple of years ago when I was looking at that's the behavior CPI. So I haven't got like the most up-to-date stats on it, but it gives a pretty good idea of just the kind of volatility and manipulation that happens with the good old CPI. And it's here. So just looking at how like you can see back from 2021, but the kind of volatility that we get for gold, like 190 pips to the downside with this was increase inflation, 190 pips to the downside followed by a 385 pip correction all the way to the up. Then the next month 460 up, 270 down. December 10, 150 up, 106 down. January 107 up. There must be like 50 up, 50 down or so. Don't know what happened to my level here. Feb 10, the next one, we've got high number. Just got like huge whipsaw, then followed by a 200 pip push and then 200 drop. Then we go to the next day, next bunch. And this one we've got during CPI, 170 down, spike back up, 200 pips to the downside, 200 pips back to upside. April 12, 180 up, then a whole bunch down, then 185 up again, 150 down, 230 up, 27 down, 500 pips to the upside. You see like how it's just crazy whipsaw, and if you've got to take a bet that there's going to be a massive whipsaw. And because that's what, like, it's unusual for price to actually just drop a whole bunch and then just stay here. Usually you've got like massive drops, massive corrections. So when it goes to trading gold with CPI, and same with equities as well, is that when you get like a big move, it's not unusual to get a huge correction, overcorrect at times, and then get a massive move again. Like it's actually the most normal outcome for CPI. So people that see this and be like, oh my god, what happened? If we just look back at all previous CPIs, this is actually very normal. This is what usually happens. So any position that you've got in to the trade, like in London session, usually doesn't survive. Doesn't survive the volatility that CPI brings. So, you can take a couple of little pot shots, little jabs once you first get in with on the initial move. Take like maybe some momentum moves with it, but secure because it's going to be until NYSE afterwards that the real move will happen, and you'll be very lucky if you survive your trade. in the London session, unless you're running with a 400 pip stop loss or something like that, or no stop loss, then you can't get stopped out. If gold breaks 2383 level, could it crash to 2357 despite? Don't think so. It could. I mean, everything's possible, but I would say we need to get, like, I believe we'll be going down there at some stage for sure, but whether it's going to be on the days just after CPI, a lowish CPI, I think it could be pretty hard pressed, but anything can happen. I would say what would be safe is price to get down to at least 2380 or perhaps 2373, between 2375 and 2380. I think this area is likely to be retested. Whether it starts breaking through here and going down would it's possible, because I do see the next 3 months being quite difficult. It just depends on how quick the market is to realize that as well. After taking Asian and some New York lows, it may go up, hopefully to take the Asian high. Yeah, I think we can go up. I'm going to be, as long as we're closer to the top end of this 2400 area, I would be leaning to some sells if we don't get any meaningful pullback. Morning, Christopher. Sorry, Andy, were you talking about gold, or were you talking about German? Morning. I can't quite hear you. Oh, you're super quiet, Annie. German. Oh, you're talking about German. Okay, so yeah, German would be a little bit different. Different price action than the gold. Aren't we? So, because gold, New York's way down here, but German's not. Let's have a little peek. So we've got what, 25 minutes for German, for London Open. Now, we've just been on the back of a perfect week last week. We've just been rising and rising and rising and rising. And it kind of sucks that we're at these all-time highs, and Asian session has made a new all-time high. VIX, I'd like to see what VIX opens as, but VIX dropped yesterday, showing like market optimism. Treasuries are dropping. I'd like to see what the credit spread, but so delayed, the credit spread. But I think there's pretty much a lot of optimism here. Dollar could have a bit of a bounce, but the dollar index is down at the base of this candle, and we've had a big sell-off. So initially, yeah, I wouldn't be surprised initially if we just keep on seeing the momentum to the downside on the back of a little bit of dollar strength. So we've closed inside of this structure. So yeah, we can easily see price continue dropping like another 20 odd pips. We've got momentum for sure. Got beautiful structure. Whether it closes underneath here or we get a fake out. But yeah, I wouldn't want to be buying right now with this momentum to the downside. I'd want to see at least some sort of structure shift, because at the moment candles are trending to the downside. Morning, Jersey. Need to see some sort of like trend line break. What's that, buddy?
New York 50%. Oh, sorry, man.
New York 50%. Oh yeah.
And the London high is interesting looking area.
Yeah.
Yeah.
That'd be nice because it's getting to the bottom of this structure then.
Yep. It's nice looking in.
A bit of confluence.
Just above it.
Yeah, so if we can... We've got some clean candles inside of here as well. So, yeah, it would make sense to
Sell to boy.
sell to buy. Or if it pushes up, buy to sell before buying again.
Yep.
Buy to sell to buy.
And you still think it's bullish? I mean, obviously it's bullish, but at the all-time highs, are you still thinking on the back of yesterday that this market is still bullish?
Well,
I thought you just said that gold's going to soften because US dollars just strengthened a bit today off the back of yesterday. Is that right?
no, US dollar weakened. But what I said then was the Dixie's at the dollar index is at the base of this very bullish candle. So we had a huge sell-off yesterday, so that's dollar weakening. But we are also at a area of support here, so we could have a little bounce off of that if people were interested in it. More importantly, what makes it tricky is that now CPI is passed, is how quickly do they see that the next 3 months is actually going to be pretty hard to beat. So I think that all of this like rate cut hopes and expectations, I wouldn't be surprised to see that completely evaporate. It's just a matter of when. So I like the idea of sell in gold. I like the idea. I mean, the equity market's a little bit. We're just near these all-time highs, so I kind of don't want to buy it. Hey, until we pull back to a decent price point of interest, or at least have seen a bottom in, and that we start getting bullish structure again. So I want to see at the moment this downtrend broken. I want to see that seeing it push north for me to get into buys. And I'm not really interested in taking a trade before the open as well. It's a nice 5-minute candle though for German. Very nice. 15-minute then is showing, because 15-minute close inside, 30-minute close inside, but no bottom wick. Hour candle still open, so the hour could just be a rejecting. But I want to see what price does. I wouldn't be surprised if we're breaking this low, then that's going to be an easy sell. That's an easy sell to the base of the structure if we break this low. So I wouldn't even be surprised to see, yeah, we sort of retest. Even if London sort of rejects this no top wick candle, I could see us pulling back to structure. Yeah, kind of like that idea. I feel like this is liquidity left behind. For me to look for longs, I want to see something close above it, the second break, retest, then look to target this area, and then see if we can extend the daily high. What's your plan, Dave?
I'm not really sure, and as you know, I don't really feel confident trading up in all-time highs, really.
Yeah, Christopher,
I
the
just find
YouTube
it
said
very
the same
hard.
thing.
It's find it very hard to see anything. I've often been surprised when I. Thanks, Joe. I told you not to tell everyone about that. Yeah, I'm not sure. I'm not sure. I think I might just wait this one. Yeah. I am. I'm not sure if it's a good thing or a bad thing, me putting that fib point on my chart, but it is kind of glaring at me.
Oh yeah.
150% monthly fib extension.
So what price is it?
It's at 18,895.
18,895.
Pretty much. What's that? 30 points, 25 points below the all-time high, the current all-time high. Pretty much just at the top of the Euro session.
Yeah.
Top of the Euro session.
Yeah, it's a pretty bad line. Adelaide, I thought pull back to the structure and then go up. Looks like I might be doing that already. Yeah. Got 15 minutes. Engulfing this candle, the previous little 15-minute candle. Yeah, I think for me is I'd prefer to actually target cells underneath here. If we get something like that, for me to look for buys, it's just too much in the channel at the moment. But we are breaking out of that. Ooh, puts me in a tricky spot. But if I'm uncertain, I'm not going to. I'm very happy just to wait. There's always plenty of trades, and I've had a fantastic week. I don't see any reason to get hasty here. But don't let me persuade anyone. I like the gold cells, to be honest. I like the gold cells because I feel this is a much better shot, and I'm happy to just let German do its thing for the next 15 minutes. So on the 5-minute chart, this was delicious. That price pulled back into structure over here. This structure gave a rejection candle. Whether you take the, like if I go to the lower time frame, the 4-minute, I can extend this box a little bit better to make it more accurate.
This is HCS as well.
Yeah, exactly. That's what I was going to say. So had a rejection wick, then followed by a retest. It looks even better on the 5-minute. When you get both of these, usually support breaks. Now, and I really like the idea of retesting 73, 2373 or 2380 to be safe. I really like the idea of down here. So yeah, got up early, and then on the back of this candle, took a sell. So I'm keen to watch this one.
So this could just be a double bottom on the whatever 30-minute.
Yeah, it should sweep that for sure.
It could just be, it could be sweeping them up.
It could. I hope not.
What are you thinking, Akshay?
I think we're gonna come back to the downside.
On gold, actually.
Yeah, on gold. So the 4-hour area from 74 to 78 area, that's the area we can look for the buy opportunity.
So that's 74.
There you go. I just popped in the entry is. So this, so see the looking for entry down here, but I'll do something at 2380. Oh, 2380. But see that 5-minute candle? After that one closed, that was the entry right here. Kind of feeling that extra getting up early. Feeling it. But once we got this, is anyone in the cells as well? This was a classic. Beautiful candle.
To my dear, then and only then I will take the thing.
You're in the cells, Sarah. Very nice.
Or a hammer. Okay, so that's it. So it's now 12.
Sounds like a Royston. A musician has been born. Oh, you can hear the rattle in the background and the piano. Good morning, Anas. You're still biased long for the German or the gold? Yeah, I've had both of these charts up here. Yeah, gold I've got much clearer levels. German I need to watch for the open because I'm not sure if I trust this 5-minute candle. I would like it to see price consolidate and then create maybe a couple rejections and then close above it. Then I think we go and we start taking the liquidity from here. Maybe we go and even fill this gap. That could be 50 pips to the upside from here to here. That could be a nice move. Patience will prevail here. But yes, I agree. I'm definitely not shorting this market unless it's like just a very easy range, because we can still easily on this pull back all the way, you know, to previous high and still maintain that bullish trend. And I do see clean space down here under here when we go to the lower time frame. So I do see leaving this low as a quite an easy trade and still able to be bullish. I see a clean candle, so I think that I think we'll bounce the first time, and then if we close underneath here a second time, then I think we can target at least down to here to the New York session. But I'd prefer it just to take this low, come down to here, and then start forming bullish structure, so that we can go retest the upside. It's just I think it's too early to jump into buys unless you know you want to, I can't say not to, but at the moment we do have some bearish structure, so I don't want to try time the market of when we break out. I'm happy to let that miss, because I know that the information gathered from watching the candles form will give me, you know, even if I have to take like a little piece of the move, good enough to catch those. So I don't need to pick tops and bottoms if it's not entirely clear for me. That's just me personally. What's going on here? Now the thing is we haven't tested the fix yet. So we could. I wonder if we're going to go all the way down to here and then up, or are we going to go up and then down, or are we going to go up and then down? One of these should play out. Because I'm already in the trade, I kind of just hope it goes straight down. But if it goes up into this area, then this is going to give me excellent opportunity for later on. So I don't really care either way. I just want this to move down a bit more. You know what? Probably going to secure this a little bit just now anyway. because I have the whole trade running, and it's 50 pips basically, so 40 pips. Don't need to be greedy here. So let me just secure some. Trying to keep most open, so I'm going to close. It's going to close a lot, and then keep the other two open. So I've secured no matter what. Now that I've secured it, let's watch it drop. Did anyone get the buys? Actually, you got the sells, didn't you, mate, yesterday?
Yeah. I got the sell. I even also took the buy from the downside.
Oh, good one.
But I did not hold it all the way to the upside. I closed around 70 pips.
Okay. So what you got like this bit?
Yeah. If you go to the 1 minute, you will see the entry. There. So here I took the entry. Here. It also matching with the 3-minute HCS, 5-minute HCS. So it was a really good entry.
Nice one.
Even yesterday also we talk about this level. If you go to the left side on hourly, we have a hourly last day of liquidity there. Yes.
Yeah. Nice one. Yeah, I got buys. I got buys on the open of the news. Took 12 seconds. 12-second trade. Only a small position though. Then I took buys on the retest to go up. So I pushed up, waited for it to come down, and then got buys for the retest. And then I got buys above 2370 up. I didn't partake anywhere inside of here.
Nice.
Yeah, I managed to get in at 23. What was it? 23.54.84.
Nice one.
That's really nice.
Yeah, I'm out for a walk at this stage.
Also, if you see the 4-hour closing there on the forex.com, you will see it was a rejection from the downside.
This candle.
That closing. If you see that first we got a manipulation from upside.
Yeah.
Then when that candle was closing, it was a manipulation from downside. The latest manipulation was from downside, and next candle did not broke that low. So it was a clear indication price gonna continue pushing to the upside.
Nice. Eddie, you're thinking 2400 maybe, depending if a 15-30 minute close. Is this a target, Eddie? You looking for longs? Up to 2400. Yeah, to the moon. Yeah, I'd like to see this just keep on. I'd like to see the momentum come in. Where are these momentum traders? Just push, pull back, push. Oh, sorry, drop, pull back, drop, pull back, drop. Maybe overshoot this and then start to see some buyers step back in. That's what I want to see. I just want to see a nice, easy drop. And then we'll look for longs to go back up. Daily candle will be like because we haven't created a bottom wick, and the daily candle hopefully will just have created this bottom wick out to there, and then we start pushing up, something like that. Then maybe Friday we do some sort of profit taking, start rejecting maybe some of these highs a little bit, and then next week we just sort of stay contained around here somewhere. Maybe Friday has that, closes something like this, something like that. That's what I want to see. At the moment, that's what I'm visualizing for like the daily. But right now, we've only got this. So we've pushed up, taken the liquidity from above. There's no wick candle. Inside of this wick, I still think there's more liquidity up here, but we're entering above the daily open. So I think we've got a bottom wick to be created. That's what I'm thinking. So that's why I'm preferencing sells first for gold down. Now we've got structure here, so I wouldn't mind not seeing price close inside of it. Maybe we can push up and create like a wick inside and then close back down, and then we can see price retest this low, break the low, and get down to 18,825-ish. So that's what I'd like to see. Sells on German for now, for this open, and sells on gold for this open. There we go, breaking the low. Now, 15 seconds to London Open. $23.80 incoming. Alright, here's the open. Wicked up. Just sitting here. We're going to flip. All right, what about you, YouTube? What are you looking for? On gold or German, you looking for longs or shorts? What's your plan? Ah, Bruce Lee, where you got any levels? Oh, hey Manny, just watching. Why aren't you in the Zoom? Oh, you are in the Zoom. You are in the Zoom. Are you? Oh, okay, yeah, you're here. Okay, come on. I really prefer gold to be the mover. Yeah, thanks, man. Appreciate it. Yeah, I am. I am. All right, so we've taken out the first imbalance candle. So it's bounced back up to the structure, rejected. Are we going to extend the high, or is that the pullback? And now we drop. But I'm not too keen on buying German just where we are, like at these all-time highs. I'm not too keen on selling German because we're very bullish. So German's a much more difficult prospect, just where we are located.
That's what I always tell myself. I say, I'm not going to buy because we're at the all-time highs. I'm not going to sell because we're at the all-time highs.
Yeah. And a day after CPI, now that information is out there and passed, like I'm just, oh man, I'm a skeptic. Hey, I'm a skeptic for this this optimism regarding just knowing what's ahead. That I can easily see a lot of people buying into the hype and buying, and we have a sell off today. I can see that happening on equities. But I can see both sides, right? I can see it just like overthinking it, and that there's just why doubt it? Just close your eyes and buy. Hence why I'm not too keen on actually touching it for the open. I'd prefer just to trade it as a technical, based on the fundamentals. I'm not entirely clear which way we go and just whether my timing's right. Trading it technically, I mean, it's very simple then. If we trade it technically, we want to see a rejection, we want to see a pullback, maybe a rejection, and then close above it, and then we test the Asian high. And just waiting for that technical pattern would actually be, far easier than trying to anticipate where this initial opening volatility goes. Hey Tom, how are you? Oh no, Ernest, don't let me persuade anyone. If you see a shot to go for it, is definitely go for it. I don't want to persuade anyone. Say every trade's got a chance of working out, so you just got to play the probability. It's just for me what I'm looking for, because I feel like I don't want to take like a risky entry, knowing that it's quite risky, especially just because I know that people just follow whatever I say as well. And if I know that it's risky and then someone takes a loss when I say this is risky, don't risk much. I know people still will go and risk a lot. So I'm just giving my honest opinion that I think whatever trade you take, I can see both cases for it to win and both cases for it not to work out. So if it's like that, then I'm happy just to sit in the sidelines, because I know I've got a much better probability over here on the gold chart. So I still want to observe German, because that's what we do. But I'm really focused on gold more so than German today. Now, what about the old equities? What's NAS doing? What are my thoughts on gold? I've gone rewind on YouTube. I went through it in a lot of detail. I only need to rewind like maybe 20 minutes. I covered it completely. But I'm looking for sells, essentially, in a nutshell, looking for sells down to at least 23.80. Yeah. Russ got some quite big pattern discrepancies between Pepperstone and Apex again this one. Dear. It's been doing that a bit lately, hasn't it? Strange. At some stage, I expect gold to revisit 23.80, if not lower. And at some stage, I expect it to visit 23.95 in this London and New York session. So these scalping sessions is about trying to time, like you could go for sells and then get in straight away and price goes up. And it's not the idea was wrong, it was your timing was off. So these are definite targets for today. You just want to get in the right order of which way it goes. So I'd really like to see it just sell off and then look for the buys. That'd be the best case scenario. For German, now that we close inside a structure, I want to see, I think exiting underneath this low would be a safe trade.
I'd love to see the take the euro high though, that imbalance.
Yeah.
That'll make me more confident.
Yeah,
You can see it's the price action to go short.
if we push up and then fail to be breaking these highs and then start breaking, closing underneath these supports, then this gives you better profit potential. Hey, it's like 50 pips then. If we take liquidity from upside, fail to generate new highs, and then start breaking supports, then I can see that full retest on.
There's confluence of a few things as well. Like there's 45-minute last day liquidity. There's that imbalance. There's that fib point. Just sort of looks good.
Yeah, and that we've tested this support once already. So if we're breaking it, it goes to the next one. 4 minute. You're looking at that live. 4 minute. Oh, we've got this. You got this HCS. Yeah, there we go. Here it goes. Love to see it just vindicate what I was saying. Just go bang. Yeah, that's nice at 4 minute. Gold's been slow as hell.
It was moving well before you started talking about it.
Yeah, I know. Oh, there we go. Yes. So that. Taking the Asian liquidity, Asian low now. You've got this little imbalance candle right at the end of New York session that we took this in. Now, let's just keep it seeing it. The momentum's here, hopefully, that we just see it just grind away now. Just go down, just keep doing all the way down. Is anyone in any trades? Sarah, I know you're in sells. Jaira, I know you're in sells. Ivan, you're in sells on German? Yeah, yeah. And Tom, you're in sells on DAX. Nice. 17 pips, yeah, beautiful. If gold drops, is that a sign of risk on? Have we moved to a risk on mode with CPI coming in even? We were in risk on yesterday, yeah. Yeah, CPI coming in soft. Yeah, it was risk on yesterday. Equities are flying. Everything was going up. Crypto was going up. The risk assets were going up, as in like commodity currencies were going up. Gold, US dollar was selling off. So it's risk on, but as much as it's optimistic for the future, with that one piece of data, the next 3 months is going to be bloody hard to get inflation down. So I'm expecting, just depends on how quickly they go to price in higher inflation, because this could be a big bullish move that sucks in a lot of buyers here. So I'm keen for the sells, but I'm cautious of once we get down to these really sensitive price points, just because of the bullish trend that we've had on the higher time frame, I would be wary of holding sells for too long. We'll get some easy sells, you know, in the weeks ahead. IP, you're short gold, very nice. Ivan, you took some profit, struggling to drop. Yeah, it should come in pretty soon. We know 9 o'clock as well is also a good time for momentum. Just want to see another 60 pips to the downside on gold. German, I'd really like to see it take out this low of this green section. Yeah, I agree, Paul. Yeah, kind of the hardest thing now as a trader is just to let it do its thing. That's the hardest thing now, is to not fiddle with it. Okay, so what's this? Bruce Lee, are you looking at if it goes up to here to look for sells, and if it goes down to here, look for buys?
Yeah. Basically, that's it. Actually, depends on the time of. Let's see how it goes.
Yeah, stinky levels. Tom closed and pocketed the pocket change. Very good. VIX is open now. So VIX didn't gap up too much. Just pretty much opened where we closed. This one's still closed. Oh, delayed. So it should open soon. Oh no, it's not open to a New York session. Okay, dollar index. So if dollar index, if we're rejecting the Asian high and we start forming like some rejections to drop again, having a softish dollar, having a low VIX would typically be good for equities. And we're starting to get a little bit of bullish price action now. Didn't quite take the highs. We haven't closed above the resistance yet. But we're getting a little bit of conflict. We've got little lower time bullish price action where this is just like a complex pullback. And they keep going down. We'll have to wait and see. Just adds to my case that I'm not really interested in trading this initial open because I can see signs of bullishness, I can see signs of bearishness. But I'd like to see gold drop a bit more, but it looks like where are we? We've got 8 minutes until this 30-minute candle is going to come to a close. And right now it's looking like it's rejecting the Asian low, having swept it, and then taking out some of these no-wick candles in the New York session. This little rejection here, namely. So, are we going to travel back up to 95? We'll see.
For the German, there's also it's also respecting a trend line as well that I drew on the whatever the 1 hour, I guess, from 2 New York sessions ago.
From underneath?
Yeah.
Like this?
Well, I didn't draw it from that weak bottom. I drew it from midway in the New York. But
Just picked a
yeah,
level.
Yeah, that's the beauty about trend lines. You can draw the world.
Yeah, just that. Look at that.
Amazing.
Yeah, having London take sweep Euro low, Asian low. It's like where are we going to go to? Well, it was a good move to take profits. I would like to see just a clean push, but Glenn, you're looking at that, are you? To reject somewhere around here?
Sweeping that should, depending on how long it takes to get there, intersect with that line. Either that or it'll intersect with this candle here.
Yeah.
And that would line up with the M30 for Akshay.
Akshay's in the trade as well. Very nice. He's looking for 91.2. Sweet, good work, guys. Excellent work.
Already secure some profit. I'm not gonna let it run like that, break even everything.
That's 50 pips, basically. So bank it for sure. Yeah, that's what I did with this guy. The entry was from this game, the one I showed, and price was just here. That's like 50 pips. So take profits for sure. Asian low on XAU was the Hong Kong gap. I've got a question with this Hong Kong gap. Why is it so big? Is it from the close of Hong Kong to the open of Hong Kong? Oh, yeah. Okay. It's not just the lunch break.
Yeah. That's why yesterday it's almost invisible.
Yesterday was bank holiday in Hong Kong.
Yeah, exactly. That's why the Hong Kong gap was just a line.
Morning, Finks. How are you? Nice one. Where's your target here?
$24, mate.
Oh, 24.
24.
Cool. Yeah, I've got a pen in order at 24.05.
But we got to break above the 90 level first.
Yeah, for a sell. That's what I was meaning. Yeah.
Buy above to 2400.
yeah. Buy limit here. Buy stop up here.
What for a target of 2500? Yeah.
27.38. Up here. No.
What BB extension is that one?
It's the 2061.8.
The moon extension.
Well, a little bit of movement finally. We had gold just consolidate for most of the second half of that Euro Open, and now we are getting a bit of volatility. Move 50 pips. And then, but at that time, now Germans died off. Uh, 2-minute HCS for down. Yeah, on the DAX. Yeah, come on, DAX. You're looking at these two, Ive. This one and this one. The one with no wick. Oh, I see. So you just use these two. Has a wick on pepper. Oh, okay. On the actual. Let's have a look.
30 looking like a pretty decent rejection too.
On
the DAX.
DAX, yeah. 30 minutes is about to come to a close.
Pulled up to that previous resistance, previous support.
Yeah.
It's taken that candle.
Yeah, yeah. I kind of wanted to see it take this one.
Raising 50.
Yeah.
New York.
Just take that euro open, no wick, because it means it's going to come up here at some stage. So I guess if it just keeps on going down, then it can look to trade it back up. But I really want to see, this structure filled.
Now it's closed inside of it.
Yeah. Yeah. Like even on the 15 minutes. But like this bullish engulfing candle, I know that this bullish engulfing candle, if we're closing underneath it, breaking it, then it'll release the volume that's trapped up in this, and that'll be an easy drop.
Well, it has closed below this support.
Yeah, and we've still got just depends on, we've got a bit of a structure shift over here.
Yeah.
So we broke first structure, and now we tested the second structure, and now if we this becomes my proper support here. So it can just bounce off of here and just keep on going. Like it does that plenty of times, especially in such a strong uptrend. But I would imagine, like, if I'm just looking for which is going to be my best opportunity for today, and if I had to just go big and go for a few pips, where's the safest range? Then that's I know it's only a small, but I've seen that so many times. That's easy money. See you, Justin. Have a good day, mate. I'll be back in a few minutes. Let's see if we can get this. See if that's a clue, the signal for price to move. But give me a second.
Start buying. Gold's looking good, Ed.
Not sure, it's struggling now. Might be rejecting 90 also.
It's brand new candle, mate. It's hovering around that 20 EMA. Mm. Oh, German's moving.
Alrighty. Hey Des. Howdy. Good to have you here. Yeah, coffee time, hey? What news have we had pop up? So, what have we got? Bank of England, financial stability, ECB, financial stability at 9 o'clock. Wonder if that will do anything. We've got a bunch of ECB speakers. Oh, look, far out, look at all the Fed speakers we've got this afternoon. Jeez. Barkin, Bar, Harker, Mester, Bostic. Jeez. They're all probably going to say conflicting things as well.
Half an hour apart.
They're going to say like we're all in agreement to that we should be data dependent and hold, and then one of them be like, yeah, I thought we should cut sooner than later. Another one said we agreed that we're going to leave all options on the table. So I was like, what? That's what they do. Yeah, there's just not, apart from, there's just not really much going on. I'm really keen for unemployment to come out. That's going to give us so much guidance. I'm really hoping we get a high number. If we get a high number, as in not like, you know, I don't want to see like people losing jobs and recession, but I want to see 230. If we see 230, it's such an easy trade then to go long equities. Long equities, most like long equities, but long gold as well. But equities would be easy peasy, especially for some of these ones that haven't hit. I think actually S&P did hit an all-time high, didn't it, yesterday? And NAS. It's nicer when you get so close to within the all-time high because you know it's going to hit. US 30 is the only one that hasn't hit the all-time high. So that's most likely going to fly. But this was the highest close ever. Didn't make the all-time highest high, but it's the highest daily close that it's ever had. So that's basically an all-time high record. So all equities have closed high. German closed high. Frankfurt, not Frankfurt, the CAC, the France 40. That was the highest ever as well yesterday. Oh, it said it was, but it looks like this wick was a bit higher. But highest close anyway. Oh, here we go. Here's German now. Beauty. Now, if we can just keep on breaking and fade out this 15-minute candle, then we get a lot more room to the downside. Let's go. I want to see this. It'll just be so good to fade out this wick. That's what I want to see. A 30-minute candle, big rejection wick, retesting the Asia like support, breaking the low of this no wick candle. What I don't want to see is, I don't want to see a 30-minute candle closing bearish. Like say this 30-minute candle closes here, then the 30-minute candle will have closed bearish, but the hour candle would have actually closed bullish. that'd be real annoying. Just want to see it all go bearish. Bearish to the bottom of this green zone. That's my whole idea for the day. That's all I wanted. And once we've done the sweep lower, then your easy trade that I'll leave you guys with, I can actually leave it with it now, is that if we do manage to, after having swept liquidity and then closing above this line, target the Asian high. Target the Asian high, target this gap. It would look something like this. Something like that. But you're just never sure where the, like inside of this area, you're never really sure where the swings are going to be. But closing, if you're waiting and closing, waiting for price to close above in a volume time, once we close, this is liquidity sitting right here to be swept, and then you've got this little gap up here as well. So once we close above here, then that's money. You guys understand that? I've got to do a video. It's just on my list of bloody things I've got to do. Is this A+ setup.
Gold's grabbed some legs as well.
Oh, above 23.90.
Mm-hmm.
Yeah, did you guys see my screenshot I put in yesterday? No one really commented on it. I assume it's all clear.
Which one? Screenshot.
This one. Only Tom and Pat looked at it. So you got structure, you get price, it gets to a POI, you've got a nice clean move up, you get price pull back, you get a fake support created, you get a partial retest, you get a closure below that support with clean candles, and then just fill the range. Easy money, like super easy money, especially if it's at the right time. That's an example of a A+ setup, whether it's in reverse as well. So if we failed, as I said, like if we failed to create new lows and then close above here, and if you've got clean candles to the left, then you get retest. It's repeats it all the time. Yeah, Tom, you gave a little thumbs up. It's on the gold chart. I gave it for everyone. Put it in here.
Yeah, I remember seeing it. I just wanted to look at it again. I was like, oh, where is it again?
Oh, yeah.
Right. Scroll through heaps and heaps of images sometimes, and
yeah,
don't find
it's
what
not,
you're after.
it's not that far up in the gold, but yeah, I get it.
Yeah, some silly bugger's been putting funny ones in there instead.
Yeah. Then no one sees it. Might as well not put anything in there, eh?
There's always a few jokers in any group, isn't there?
Yeah.
We know who they are.
We all do. We all do. Yeah. What they say, you don't need a long neck to be a goose.
It's like there's a hangover from CPI yesterday.
That was pretty big day. That was pretty.
It was exciting. Yeah, it's always very exciting. It's only moved 30 pips and 45 minutes into it. I think it's because I started the stream way early, so it's it feels like I've been here for a long time, but it's like we've only had 45 minutes of action.
Yeah. The hourly on gold's looking good.
At the moment, yeah.
Yes, nice engulfing candle currently. Liquidity candle.
Yeah, nice rejection. It's lovely rejection from that area. And then just breaking these lows would be beautiful. What we don't want to see is the went blue. What we don't want to see is the next candle in the next hour. Well, you may want to see it, but if we see something like this, then it helps the buy case. But I'm saying, like, when I say I don't want to see something like this, is that I do want to see that my target play out and be hit, because I know that's like a good probability of liquidity that's going to be tapped into, and I don't particularly like it when it turns around just beforehand, because it leaves me personally, it leaves me in two minds.
Just looking at this candle here.
Look at this is looking beautiful.
Is that your structure on the lower time frame?
Nah, it's smaller.
That.
That's my structure, the green zone.
So not that week, not those weeks.
No, they're just, that's just volatility.
I know you use your body closes, but I'm just looking at how that was formed.
Yeah, that's definitely the much more precise zone. With we've got these are like your fake outs. They're your fake outs and the wicks. So I know that this is like most of the actual bulk of the activity.
Yeah.
All right, 15-minute closed. Yeah, come on. And it's just, we just see this trending structure keep on playing out. Just got a little bit more to go down. Nice one, Dave. And the short, yeah, it's grinding down. Yeah, feels like it, doesn't it? In it for a while. It's only moved 30 odd pips. Okay, so because this was a bullish engulfing candle on the 5-minute, it'd be a bit of a pain if we're showing rejection again. Thing is though, we didn't really break structure. Kind of broke a little bit here. But I'd like it just to fade it out and just drop. Just do it. I guess I'm keeping an eye on gold price here as well. It's just stuck around 23.90. Five-minute HCS and gold, is it? No, there's nothing here on gold.
Unless you're including that bearish wick.
No, he's looking for the upside to go down. This is it here, yeah. That's it. That's the little resistance. So for 20, like if we close above this, then yeah, 2400, maybe 2405 is on for sure.
Ooh, that sounds good.
Because you got a triple top over here as well, so that's definitely Asian traders stop losses above here, right? So that's where they push price down, push price down, push price down. So for definitely there's liquidity above here. So if we're closing above this rejection wicks for resistance, closing above, then you've got 50 pips the upside. It looks, I think this is the thing that people go wrong on as well, is that people want to have all the sexy trades where it's like you pick the bottom, you pick the top. But if you're just looking for 50 pip ranges and trading from here to here, that's 50 pips. That's very, well, it's not quite 50 pips. That's 30 odd pips, but that's great money. You can make that worth a hell of a lot. Just targeting like high probability zones. Took a quick 20 pips on gold, secured 75%. Now stop loss is at the moon. Ty, a good one. Nice work, mate. And we've got updated poo levels. Oh, 18816. I'm German. 18816. Oh, that'll be the bottom of this area. So that's like these wicks down here. Okay, yeah, I can get around that. I'm not sure, Tom. Not sure if it's rejecting here. I just want to see it close inside and drop. Just do it. Just drop. Drop and then let us all have a good day. Yeah.
Supports.
Yeah. Now it's a 5 minute. 5 minute HCS to the upside.
Oh, yeah, if it closes that way.
If it closes there, this one closes in a minute's time.
Nice early, beautiful hourly close if it does.
Mm-hmm.
It is now.
Yeah, yeah, our will be really nice.
But I'm still cautious of this liquidity up here, that it might push it down again, but
Am I still in short for gold? Yeah, my runner is. I secured at this area, about here. So entry was here, secured here. I was leaving my runner to see if we can get the entire target. Ah, now German's doing this thing as well. So we've got the last 5 minutes now of the hour candle. Bloody hell, man! What a boring old session.
I haven't taken a trade yet. It's been watching.
Yeah, I mean, I didn't get a trade.
I
I didn't get a trade in the London Open.
just haven't seen anything that's really appealing.
Yeah, yeah. The volatility happened in the Frankfurt Open. That's the only time we've got like some nice movement. I mean, if you went for longs from underneath this Asian low, then you know that's moved up 50 pips. But I can't sell. I can't buy once I'm already in the sells. I can't have both open at the same time. Makes it difficult for me. So I prefer just to see this trade finish and then look for a new target. I don't want to look for sells if we're pushing up into this area. I'll be looking for sells from higher up. And if my runner just closes at break even for the runner part of it, then I'll have a look again. But I still see this area as a bit of a problem zone. This one here. But I would expect to see the euro high taken. But I kind of would like to see price doing something in this green zone for me to have a look again. I'm going to actually put some alerts inside this green zone. Here, at the bottom of the top of the green zone, and then at the key level of 2405.
looking on the low time now.
It's bullish. Yeah, it's very bullish. It's very bullish. It's just I struggle to see strong continuation. Like, see how price often once we are breaking and making new highs. Same thing as when we were pushing like up here. Price would often come back and like retest the previous highs. So that's why I want to see price now before we can get like a real extended run up. I'd like to see price have come back because it just does that often. That's why I'm targeting like this area, or at the very, very least, I want to see price having hit the top, come back before I can get a trade, a long trade that I'm going to hold for a long time. I need to see at least pull back to here. That's why I'm preferencing sells for now, because I really want to see that. That's like, I'm quite strongly biased towards seeing that little move. Plus, like, we've got all these big all-time highs, and I know dollar's softening at the moment. Dollar's showing a little bit of strength based on where it is. I do see dollar getting stronger over the next few months, and if we are going to be, if the dollar is going to soften and inflation's dropping down in the global markets, I see the equity markets being a bigger winner than the gold market. That makes sense?
Yeah, because there'll be less funds, so people will be putting money into more
riskier assets. Yeah, and if we get any sort of sign of a truce or de-escalation in the Middle East, I know we've got there's big central bank buyers in this gold market. because we're seeing it. We're seeing, so there's at any time we could see just heavy bullish trend. But I do think the equity markets stand to benefit a little bit more right now than gold. Do we have a trend line? Is that a trend line? No, we don't.
It got broken here and retested.
Yeah. I was just visually trying to see it. Yeah. So I think there's more chance for gold to sort of reject these highs, because gold is also used. That's the thing. Gold is used in goods and stuff, and that does, like, when it gets too high, it does put a little bit less demand on like jewelry and things like that. So you can see. I mean, it's only a small proponent. Most of the gold is just a store of value, but I can imagine that I struggle to see us breaking new highs without at least revisiting 2380. So therefore, all my buy trades would be short term, and I'd rather just have a firm bias and then just look for anything that gives me a good opportunity for a sell, than looking for longs, especially when I think that I think today I still at some stage will see 2380 hit. Whether that's in the New York session. Oh yeah, Paul. Yeah, you need to go and calm your jitters from all this adrenaline, huh?
Yeah, that's it. Can't take anymore. I'll see you later.
When the market's moving this fast, you just need to no one needs any coffee.
I'll have a little lie down.
Yeah, have a lie down, have a tea.
Yeah, it should.
See you, mate. Catch up.
Just a question on gold. That you're saying it was a nice little buy from underneath the Asian low just now.
Yeah.
But on what basis would you take that trade? Simply because of the confluence of that imbalance being taken and the Asian low? Is that all you would require to think that would be worth a shot? Or is there anything else there that would indicate to you that's a good opportunity? Or was it just that candle? Or
I mean, I didn't take it. I wasn't looking for the buy from here, but it's just, it's an Asian low. It's a Euro low and it's an Asian low, and you've got a little bit of a support from the New York session. So unless you've got like strong negative volume, then if price just goes from liquidity to liquidity, then we'd have to say that that's picked up some liquidity from here. So it's likely that you can get a bit of a pullback, and if it's a pullback enough to get your risk out, then who knows, maybe it did get a low.
Yep.
Okay, 9 o'clock's here. Can we just see the new hour candle after just an hour of nothing? Can we see this actually start to make us move? Let's go. I'll close the stream and it'll move. It's thinking about it.
We've got to start talking about the buys we're going to take.
Oh, that's a good idea. So...
Yeah, but we're going to take him from all the way down here, so don't come down here.
Yeah, I want it to go... I'm looking for this.
Yeah.
Just want to get, just a little bit of the move.
Play it safe.
Oh yeah, Eddie said as well, the $5 levels on gold from Kerwin are good key levels. In London session, if there's not much volume, gold will sort of bounce between $5 levels as well. Why don't we put it down to here? Put my stop loss here. And we'll just go for a smaller target.
Nice one, Grandma.
That's a good one.
Let's get you back to bed now.
I know that one.
Oh no. need to break this 5-minute candle, release the volume from it, and then we can just see steady moves.
I think you could bring that stop loss to break even, but right now I think.
This one up here.
Yeah, I think that's probably ideal. Just de-risk it.
Yeah, take my risk out. I got my entry.
Oh no.
Oh.
Oh, there you go.
Oh dear. Alrighty. Well, Zoomers, stay on. YouTubers, gonna bounce. So, left you with my ideas. I think I've spoken about it quite a lot. And I gave you that little screenshot thing of a typical trade just to go on, like, you know, if there's no real fundamentals kicking things off, then the technical levels do play a bigger role. All right. So good luck today. If you've had a great week, make sure you don't ruin it. Make sure you book your profits and then have a good weekend. I'll see you guys tomorrow. All right, YouTube. Zoomers, stay on. We'll just try find. We'll see. We'll watch this. I need to close the YouTube stream so that this can move. All right. YouTube, thank you very much. I'll see you later.